estate expert to learn more. Joining me right now, Liane Jamason with Smith & Associates, our real estate expert. Hi.
Hi, how are you?
Do we have a housing bubble going on right now? Just check it.
I wouldn't call it a bubble. I would say we're in, we have cycles. Every 7 or so years, things kind of go up and down. I think we're somewhere up here.
Yeah, because I heard somebody say on the radio yesterday going, oh no, not again. Hey, we're here to talk about something about HUD and FHA financing first. Let's explain to the public doesn't understand, what is HUD and FHA financing basically?
FHA financing is a low down payment loan for borrowers that maybe don't have a ton of cash to put down. It's 3.5% down. And the FHA insures those loans for the lender. So what recently happened is Obama, right before he left office, put in a cut on the private mortgage insurance that you have to carry on an FHA loan. And Trump, minutes after he was in office, promptly called that back and said, hold on, we're going to review this and see if...
So the bottom line is that the president wanted, President Obama was going to allow you to have to pay more, right?
He was actually putting in a reduction, of about a quarter point.
In the premium? Oh,
yes, in the private mortgage insurance.
Right.
And then Trump called it back and said, let's review it and make sure that FHA is well funded before we give that.
I was just going to ask that. I mean, the reason for it was because if you're going to have an agency that's going to insure people against bad loans, they need to have some of that money stored away someplace, right?
Right, and I think that's what the Trump administration wants to do, is make sure that it is well funded.
Because that's kind of the trouble we got into back in 2000. I didn't want to hardly even say the word, 2007. Back then is when we got into trouble, because we had a lot of people that were also getting into homes, and they really didn't have the money to qualify. Now, okay, another question along those lines, because I heard it said, which is another way of saying, I don't know if this is true or not, is that some of the companies are now offering these loans that really are not as secured as they used to be. They're not requiring as much, and now people are afraid. Are we getting back to those mortgage-backed securities, which really didn't...
Yeah, I haven't experienced that personally. There is talk that lending guidelines are going to start to loosen a little bit, but I haven't personally seen it. I bought my house 2 years ago, and it was like they asked for a stack of documents like this.
Oh, yeah.
So. It's still pretty tight, and they still are working a lot harder to verify income.
Is the housing market still used as one of the major categories to determine where we're going in our economy?
Absolutely.
And why is that? Because it affects so many people?
I think it just affects so many people. It's such a huge, for most people, it's their biggest financial investment. So, and a lot of people own houses that don't own stocks and other investments like that.
And then you've got the builders, the appliance makers, the pavers, all those kinds of people. So it's an interesting indicator. I was kind of kidding on the one thing talking about whether we're at a bubble. But recently, Tampa was named as one of the hottest markets. In fact, of the top 5, 4 of those were in Florida. The only one that wasn't in Florida was in Dallas.
Absolutely, yes.
Is that good though?
I think it's good. We had quite a downturn in 09, 08, so we've really come back from that. Actually, prices jumped 14% in December. So we've had a big jump, and I think what's going to happen is supply is going to continue to tighten a little bit. Lower price ranges are getting squeezed a little bit as interest rates start to rise. So those people that are in that $150,000 to $350,000 price range, it's getting a lot tougher for them to find homes.
Now, just recently we've had developers up in Pasco County near Wiregrass that are putting in maybe up to 5,000 homes. Just last weekend down at Lake Erie College of Medicine, their graduation drove around the Lakewood Ranch area, and I'm going, they're planning another 4,000 homes down there?
Yeah.
That's 9,000 homes. That's got to have an impact on what's happening with these homes that already exist.
That they are, and they're selling, or they wouldn't be building them. Some of them are selling pre-construction before they're even built. So there's definitely a shortage out there.
So the economy, I guess, is turning around. And the reason I say that is because you still look at your savings account and you go on $100,000, you gave me $1.
That's true. It's true. Yeah, I would certainly say that we're kind of at the top of the real estate market from where it has been over the last 7, 8 years. So we're doing well.
Is the toughest range to find a home still between $150,000 and $250,000 in that area?
Absolutely. Very stiff competition in those price ranges, and investors are buying those price ranges too, either to fix and flip or to rent them out, because the rental market is tight too.
Now I ask you this again because I had somebody who actually emailed me and wanted to know, hey, you said the flipping market is over. one of your guests, and now I want to go
No,
with
it's not
first.
over.
It's not. So it isn't over.
No, it's not over. There's still plenty of opportunities. Just like in any market, even if we're in a hot market right now, there's still always deals to be had. So it's just finding the right properties, and there's still profits to be made in those flips.
Now, is Deutsche Bank still holding a lot of properties? Because I've kind of dealt with them in a couple of other instances.
I think they're holding some. I'm not sure if they're the bulk of it anymore, but yeah, I'm sure they're still holding a good number.
And because you always got to talk about this in the market, buyer's, seller's market, and even as I say that, I know that there's the ideal, this is a seller's, the ideal, this is a buyer's market, but in reality, if you got a job and you're moving down here, it doesn't matter where it fits, you need a home.
You need a home, yeah. We're definitely still in a seller's market. But, you know, I've always kind of said it doesn't matter as much when you're buying and selling, because if you're selling, you're going to sell high, but you're also going to buy high, so it kind of becomes a wash.
Yeah. Not
that
a good
makes
wash.
sense. Not a great wash. Hopefully you sell a little higher than you buy.
Right. Now, and again, I was questioning about these apartments again. We've seen so many of these large apartment complexes, you know, 10, 20 stories. I go down downtown Tampa and I go, who's renting all that stuff? Are those rentals or those purchases?
Some of them are rentals, some of them are purchases. There are some new condo high-rises going up, but a lot of them are apartments as well, because there's certainly a shortage for that as well.
You know, one other question I want to ask you, and I've always forgotten about this, what really is the best way to buy a home? Is it a 30-year or a 15-year? Because if you look, if you look at what you're paying over 30 years, you're talking a $100,000 home, and I spent $480,000 on it.
I mean, it depends on who you are. If you're a millennial and you don't have a lot of cash down, certainly you're probably going to have to get into an FHA or a low down payment conventional, maybe 30-year mortgage, but you can always refinance it down the road as you pay it off to a 15-year. If you can do a 15-year, 15 years great, because you're not going to pay all that interest.
Now, I want you to get a crystal ball out here, one that isn't broken, one that wasn't used in the election, okay? And where do you think we're going to go with the Trump administration in terms of what we're seeing early on? Although, as you know, with this administration, things have changed so rapidly, it's kind of like, I don't know, where is it going?
So I think, like I said, we're going to continue to see a little bit of a squeeze on millennials and buyers in a lower price point as interest rates rise, especially. The expectation, the people with the crystal balls out there are saying that the luxury market is going to see a little bit of an uptick, because they're expecting some price cuts for people in those income levels from Trump. So affordability is going to worsen a little bit, I think. And prices are going to continue to rise, but slowly.
In this area, you have, I think, an inordinate number of really expensive homes, especially driving around the beach communities, but there's some Avila and some of these other communities down Royal Palm, if you're going way down to Naples and stuff. Where are those people coming from? Do they all have multiple homes? Are these second, third, fourth homes?
Sometimes that's the case. Sometimes they're locals, doctors, lawyers, things like that, but sometimes they are buying second and third homes, absolutely.
And then maybe the question that everybody is wondering with Trump, will he get rid of the mortgage deduction that we have on our income tax?
There is talk of that. I did a little bit of reading up on that, and from what they're saying, it's not going to affect people as badly as they think. It's going to put a cap on it, is what they're talking about, not maybe eliminating it altogether. But of course, I'm always for anything that helps homes be more affordable, and tax breaks for homeowners are always a good thing.
All right, we start having one or two things to talk. We're talking about 8 topics. Leanne, we love having you here because you know what's going on in the real estate market. And come back again when you have some good news, okay?
Yes.